As a driven dentist, you see the world differently. Where some see scarcity, you see abundance. When others want to give up, you keep going. You're building an amazing life of significance. That means you can't rely on ordinary advice from ordinary advisors to get to your goals. You want advice that's going to help maximize your net worth so you can take even better care of the people you love, the causes you care about, and make your dent in the universe. But the fact is, this advice remains hidden because relatively few professionals are well versed in them, and the extremely affluent don't care to let you know about them. Join us as we pull back the curtain to reveal the often hidden advice and strategies used by today's most successful individuals and families. Welcome to Dental Wealth Nation. Here's your host, Tim McNeely.
Hey, welcome everyone. I am so excited to have you here today. And as you know, as a dentist, one of the greatest ways that you can build and prepare for your future is through practice ownership. And that's why I'm so excited about today, is because by the time we finish today, you're going to know what the benefits of ownership are and why starting your own practice is actually an excellent path to ownership. You're going to have a much better understanding of the lending process that can be so confusing sometimes. And we're even going to cover some common misconceptions that are out there. But most importantly, you're going to feel much more confident about taking the steps towards owning a practice. And today I couldn't think of a better guest than Jason Schneller to help you think through these. Jason is Regional Director of Projects Loans at Provide. And I could tell you that Jason's been lending to dentists for over 20 years. I could also share with you that Jason has helped hundreds and hundreds of dentists start up their own practice and hundreds of dentists acquire their own practice. But what I really want to share with you is that Jason loves playing a role in helping you achieve your ownership dreams. Jason, welcome to the show.
Yeah, Tim, thanks for having me. I know we've been talking about this for a while, so it's finally good to be here live with you.
Yeah, and I'm so excited. I can't think of a more important topic than really building wealth, building practices, and either doing that from startup or acquisition. And I think we're really going to focus in on that startup today. And so tell us a little bit about yourself and how you got started before we dive into this.
Yeah, so I've been in the industry about 20 years. Worked for some of the big banks, always in practice lending, helping doctors secure loans to, acquire practices, start practices, for our established doctors, helping them continue to grow, expand their empire. So been doing it 20 years. I've been with, over those years, a handful of the practice lenders, in the industry that are still around, and decided to make a move over here to Provide about 5 years ago. And I've been here ever since, doing loans. Again, my focus here is really, the startup loans and established doctor project loans, office remodels, expansions, additional locations. We do all that very well.
Yeah. Now there are a lot of associates out there today in the field, and some are thinking about ownership, some are thinking about acquiring a practice, some are thinking about starting up a practice. But before we even dive into those different options, like, why should a doctor even consider ownership at all?
Well, I always ask that question. A lot of times when I do these live events, one of the questions I always ask at a live event is, what are some of the benefits of ownership, right? And usually the two responses I get, right away, every time is, it's an opportunity to earn better and be more in control of your own destiny, right? So, and I think that's very true. While it's never automatic, right? It takes hard work. No matter what business venture that you're going into, it takes a drive, a willingness to work hard to achieve success. But I think as a practice owner, you're really only limited by how hard you work for yourself. So that's why I think it is very true that, and why doctors are in control, or owners are in control of their own destiny. As an associate doctor, you may, have to deal with stressful demands, long hours, maybe, but income can be very predictable and stagnant. Maybe you do get a bonus here and there, but after a while, you're really, we see a lot of doctors, really become unmotivated in associate positions because they're really just earning or helping earn for somebody else rather than themselves. So there are a couple other benefits, I think, that owners do get, where associates may not. And, for example, a big benefit, is tax planning benefits. If you talk to any of the dental CPAs in our industry, they'll tell you all about how they can use the depreciation of assets to offset tax obligations and keep more of that hard-earned income, in their pocket. Another often overlooked benefit is, as a practice owner, you're building an asset, right? So you're not only working, you're not only working to get fees from your patients, but you're also building an asset that's going to appreciate in the practice that it can eventually be sold, and over time that could be a nice boost to a more comprehensive wealth strategy, right? So I think, again, all these things working together, working for yourself, earning for yourself, being in control of your destiny, own destiny, benefiting from great tax planning benefits as an owner, and building that asset that can eventually be sold is typically why we see our owners accumulate more wealth over a long period of time versus doctors that remain associates over that same time period.
Yeah. So, right. I'm listening to all those benefits and I'm thinking, wow, that sounds great. And so I guess my next question would be like, why wouldn't someone want to own a practice? Well, what are some reasons that maybe someone should stay an associate and not become an owner?
Ownership's hard work. Let's not sugarcoat it, right? It's not for everybody. I talk to a lot of doctors day in and day out, and sometimes we even talk to doctors where they want to either acquire or start their own practice and become an owner. You talk to them a month later, they don't want to do it anymore. Life events happen. Lifestyles changes. And there are many doctors where we've been going back and forth for many years, and that's fine. It's not for everybody. But I think from my desk, when we're talking about what may keep doctors from taking that leap of faith, I think there are a lot of misconceptions out there, and I can share just a few of those that I often hear that may be keeping doctors from taking that leap of faith into practice ownership.
Yeah, and you're talking about not necessarily those associates who are just kind of happy doing their thing, they're working there, and they're like, ownership's never for me. You really talk about the misconceptions of someone who's an associate who's thinking, man, I'd love to own my practice, but what about this and what about that? And I can never own a practice because of this thing here.
Right, and so there are definitely roadblocks, and as a lender, when we were first doing that initial call with these doctors that have a real interest in pursuing ownership, some of the roadblocks that I often hear and we help doctors work through are, collateral, right? They're misconceptions, like, they have these preconceived conceptions on what a lender is going to require in order for them to secure a loan. And a lot of times it's just because maybe they're talking to the wrong people, right? In dental, dentists have very unique lending options available to them that are very specialized and really just designed to help doctors succeed, right? The types of programs that dentists have access to here in the dental industry don't exist in other industries, right? In other industries, doctors may rely heavily more on like SBA type loans, right? Small business loans, which are very different types of loans. They have their place, but dentists have way more specialized options available to them to help them achieve practice ownership.
Now, are these specialized options? Are they available if I show up at my local bank and my local branch or local credit union, and I walk in and say, "Hey, I'm a dentist. I hear you've got special programs." Are they going to be able to help me out?
Not necessarily. Here and there, perhaps. But these are very, very unique options. Typically with local lenders, we typically see them because they don't have access to specialty programs. We typically see local banks that don't have specialized healthcare divisions. They're the ones that are typically driving them towards SBA because that's really the only option that they have. Now, if you don't know any better, that may sound like a great option until you talk to one of the specialty lenders here that can walk you through, how their programs work, how they're designed to help achieve success. And, so they are very unique.
Okay, so when you're talking about specialty lenders, you're not talking about a lending program down at my local bank. You're talking about actually companies that are invested in and work in the healthcare space and actually cater to dentists because they understand them so well. Then,
right. So, for example, here at Provide, if you don't have a doctor in front of your name, I can't even make a loan to you. So it's very niche, very specialized. Some of the bigger banks do have specialty programs, only a handful. But yeah, we're one of the lenders that do have a specialty program here. All we do are loans for healthcare professionals. And I'd say about 80 to 85% of all the loans that I do personally are for the dental industry.
Okay. So right, if you're an associate and you've been kind of looking at this stuff or kind of, poking around at kind of your standard sources that you're used to, you may be very discouraged because you've heard no, or you've had all these crazy collateral requirements, or maybe student loans have gotten in the way. And it sounds like by working with a specialty lender like you, a lot of those things aren't issues anymore, or at least as big of an issue.
Yeah. So let's walk through some of those roadblocks. In many cases, the first call an aspiring owner may make, a young doctor might make, is to a lender like myself. They may say, "Hey, Jason, listen, I've been associating for the last few years. I'm kind of burned out a bit. I think I want to take that leap of faith and start up my own practice. But I don't have any collateral to put down. Right? I live with my family. I rent an apartment. I can't pledge my home as collateral to secure a loan. So my response to that is, lack of personal collateral is not an issue for the specialty lenders, right? Typically we don't need anything pledged as collateral other than the practice itself. Because we understand the dental industry, because we understand how these practices appreciate and build value, and that's enough collateral for us. So we collateralize our loans with the practice itself. We're never going to ask a doctor to pledge any personal collateral. Okay. Another, when I'm on that first call, another, roadblock or misconception is, Jason, I don't have any money to put down on a loan, right? And again, this is very common because if a doctor goes to a local bank that doesn't have a specialty program, a lot of times they're going to talk to them about an SBA loan. Now, SBA is going to require money down, typically 10%. Okay. With the specialty dental programs, we don't require any money down. Okay. We'll lend a doctor 100% of the construction money and the equipment money that they're going to need to start up a practice. In fact, we're even going to include working capital so that as they go in there as a new business owner, they have access to additional cash flow. Okay. So again, very, very specialized. We can help a doctor scratch start their office with no money out of pocket. Okay. The other part of that conversation is, Jason, listen, I don't have any savings or cash. That's good to identify up front. We encourage doctors to, leading up to, applying for a loan for a startup or even an acquisition, to focus on putting some money away. A good place to be right now is going to be in that 5 to 10% liquidity. So we're going to want to at least see that much money in the bank. But again, as long as we can show that good credit score, typically we'll lend up to 100%, no money down for a startup practice loan.
Wow. That's amazing. And so, what about student loans? Do those play a role in stopping an aspiring owner in getting financing?
So yeah, so I'd say that's probably one of the biggest roadblocks, right? So student loan debt, is probably the biggest concern among young dentists graduating today. And we see it all over the board, right? Sometimes it's 300,000, which I think is about the average. Which, I say 300,000 to a room full of young dentists, and they're looking at me like, holy smokes, that I wish it was only 300,000, right? So we do see much higher than that. The way, so student loan debt does need to be factored in. So when we do our startup loans, we are based, it's a projection based cash flow, right? Because there's no patient base there. It's a new business. So when we're looking at personal debts, student loan debt is something that we need to, factor into our projected cash flow. But, we're in the business. Again, we're specialty lenders. We're in the business of lending money to dentists. So we know in order for doctors to get that license to practice, it comes at a cost, right? So we're used to seeing pretty significant amounts of student loan debt. Don't let that discourage you. If you want to pursue practice ownership, don't let that discourage you. I think the big misconception out there is a lot of doctors think that they need to pay down student loan debt in full or aggressively in order to secure, a loan to start a practice. Okay. What happens is when, doctors start paying down student loans aggressively, right? It creates another issue for us as a practice lender, is that it actually, if they're paying down student loan aggressively, it's limiting their savings, right? And we said earlier that, typically on a startup loan, we're going to want to be in that 5 to 10% liquidity. Okay, so in many cases, if doctors are focused on paying down that student loan debt aggressively, it may limit their ability to save, and that creates another issue for us when we go to credit. So as a practice lender, as a specialty lender, I'd much rather see more savings than lower balances on student loans, because student loans, the only way paying off a student loan can benefit a cash flow if it's paid off in full, and that monthly payment is completely eliminated.
Mm-hmm.
Okay.
So when you're saying that 5% liquidity, or 5 to 10% liquidity, you're talking about the overall project size
of the total loan amount. So
okay.
Let's say it's a $600,000 loan, right, for a startup. Then we're going to want to be in that $30,000 to $60,000 range.
Okay, and so not even necessarily collateral. You just want to see that there's some cash on hand then to make it through and make sure everything works smoothly then.
Correct.
Okay, gotcha. Now, I'm listening to this, and I know many people may also be listening to this thinking, why would you do this, right? Like, it's a new dentist. They're, starting up a practice. They've never owned a business before. Like, isn't that really risky for you as a lender to go out there and give people this amount of money to start a business and run something they've never run before? Like, why would you do this?
Yeah, we often get that question, I think if again, I think the lending piece is a very important part of success, right? Working with a lender that understands dental, understands, how these projections are going to work, and understands how to structure a loan properly, to kind of help doctors, almost grow into their business, right? So I think lending can be a big piece of that. What we typically, would do for a startup loan is we don't approve a loan. Let's say, a doctor comes to us and they need $750,000 to start a practice. What we don't do as a lender is we don't come in and say, doctor, here's $750,000. Good luck. We wish you the best. With building your business. What we do is more of a controlled process. So what we do is we approve a doctor for that $750,000. We set that money aside, and then we have them work with our team to disperse funds to the various vendors, right? During this period of time, we call this period of time the build out phase or construction phase. During this period of time, a doctor's not required to make any payments to us. Okay, so we don't want to put a doctor in a position where they have to start making payments to us before they're ready to open their doors, or at least very close to that, and they have patient flow coming in. Okay. So during this period of time, we're dispersing funds, but no payments are required to the bank, on the loan. At some point during this construction period, a doctor's going to call us up and say, okay, the construction's done. The equipment's being installed. I'm ready to open my doors on Monday and start seeing my patients, right? That's typically when we tally up everything. We'll tally up what's been spent. We'll include, whatever's still pending. We'll add in the working capital. And that's when we'll roll the loan over and the payment schedule will start. The way we structure our startup loans is we give the doctors a grace period in the beginning. So for 2 years, we give a very low monthly payment, maybe interest only for for the first 2 years. And really what that is designed to be a safety net, right? Doctors can fall back on that low payment to redirect cash flow towards other things they need to grow, their business, maybe marketing, maybe hiring staff, and things like that. So that low payment is intended to give that doctor a safety net in that first 2 critical years of that startup business. Eventually, after that 2 years, the payments will level out for the remainder, like a 10-year term. So in all, it's about a 12-year term. But that structure, coupled with the fact that we're also going to give them, a good amount of working capital as a new business owner, I think is a major reasons why we do see a lot of success, in our startup loans, right? I do see doctors, again, this is why I think it's important to do interviews like this to get content out there. Because still to this day, even though a lot of these specialty programs have existed for many years, I've been doing them for 20 years myself. We do tend to get doctors that try to piecemeal these loans together, and then come to us way too late in the game. And by that time, it's so hard for me to kind of unwind it that it's unfortunate, because I just, I'm able to kind of help them kind of out of that challenge that they're having. So what tends to happen is, when I say piecemeal a deal together, is, doctors may, go out and get short-term equipment loans, maybe through an equipment vendor, 3-year, 5-year, 7-year. As long as you have a license to practice, a heartbeat, and a good credit score, dentists can get a loan, equipment loan, very easy. But it's not always the best structure, right? They're usually typically short-term loans, which for a new business can constrain a cash flow. So they go out there and maybe get these short-term equipment loans thinking it's a good idea. They're self-funding their project either from their own savings or credit cards, right? And that can have a negative impact. So by the time they come to me, they kind of dwindled their savings, and don't have the liquidity I need. They've run up credit card debt, so that's affecting their credit scores. And they have these short-term equipment loans that they can't get out of. And again, trying to unwind that, at that point is very difficult. So that's why I think, again, as part of if you're looking to do a startup, there are only really a few banks in the industry that can actually do startup loans well and have a good program for that. But I do think it's important to work with a bank or a lender that really understands how to structure, why structure is very important, because that's going to help doctors succeed as a startup.
Yeah, no, and that's so true when you're talking about the structure and the managing cash flow. Because when you're starting a practice, you're starting with how many patients exactly?
Well, 0 technically, but what I've seen over the years too, and again, this is where it comes down to building your team, right? As a lender, I'm a part of a team that you're going to build, right? You're going to have equipment specialists involved. You're going to have people that can help you find a space to lease. Realtors, every broker has a specialty realtor that can help doctors find space. You're going to hire architects and contractors, and they're all going to give you great advice. What we see the trend these days, like when I first started doing startups 20 years ago, there were maybe a handful of consultants that really understood how these startup loans worked. But for the most part, 20 years ago, it was the doctor, doing their own research, maybe doing some demographics, building out and equipping the office, and hanging a sign. And as long as they had, good visibility, patients would just show up. Maybe they put an ad in the local publication or the yellow pages, and that seemed to work. These days, there are resources out there, amazing consultants that actually start working with dentists from, before they even have a space, right? So they're helping, guide them, helping them create their vision for a practice, create their brand. So what has changed over my time is there's a lot that you can do during that period of time where you're maybe not open yet, but you're building your practice and equipping it. There's a lot that you can do to build up patient base so that when you do open your doors, you're not necessarily starting with zero.
Yeah.
You've already done that pre-marketing to get in there. So that's a nice trend that's encouraging, like I said, in dental, more than even some of the other healthcare industries, there's a tremendous network of advisors that, again, if you're, if you have any concerns about your ability to own and manage a practice, there is resources out there that can help you and hold your hand through that process.
Yeah, and in fact, we've got some comments coming in here. So we've got one of the great partners out there right now, Ali from the doc sites, right? They can help you grow your patient base, and so there are the resources out there. And yeah, Ali, so glad you appreciate this information. I know you work with a lot of startups also. And so, Jason, I know every startup is different. I know every practice is its own unique animal, and every owner is its own unique person. And so, but as you kind of look out at the startup landscape, how often do these practices actually succeed and doing well? And the reason I ask that is, once again, banks and businesses aren't typically in the business of trying to lose money, right? You're in the business of trying to make a loan and get paid back. Like you don't not want to get paid back as well you should. And so how often do you actually see practices succeed versus practices fail?
Yeah, so I can tell you for sure, if our startup loans did not perform, we would definitely not be making startup loans to dentists. The fact is that they do perform well, and again, for many of the reasons I just gave you, proper structuring, access to working capital, that all makes a huge difference in success. But in short, to answer your question, default rates on our startup loans are no different than doctors that are looking to that have acquired practices.
Yeah.
They do perform well,
which among all the industries are some of the lowest default rates anywhere.
Correct. Yeah.
And that's what I want to share, because right, if you're listening to this, and rightfully so, you may have a lot of fear over stepping out and thinking, man, I could never do this. This is going to be too hard. It's going to be too difficult. I'm not going to be able to make it work. Well, the numbers tell a very, very different story statistically.
That's why I always say, and that's why I want to, with our time today, talk through, startups, right? Because, we do a lot of acquisition loans. That's always been our bread and butter from day one. We do help doctors acquire practices in full or part. So we have great programs for that as well. But, there's less information out there, for these doctors that want to start up. And typically what I see, again, from my chair as a banker here, is in certain markets in particular, I'm based out here in Los Angeles, but to find that practice in the neighborhood you want to be, that has the great cash flow, it can take time, right? So a lot of the startup doctors I work with right now are doctors that were initially pursuing an acquisition, have looked at many practices, have made offers on practices, but because it's so competitive, they weren't in that first position to get it. And after looking for a while, they kind of say, you know what, I think I need to pursue this startup route. For me to be able to have my own business in the community where I want to be, I'm going to be waiting forever to find that perfect practice. Why not start up? So we do see a lot of doctors, again, start with the intent of acquiring, but eventually kind of move more towards listen, let me learn more about startup. Let me understand how that process works, and let me go that route.
Yeah. So, right, if I'm an associate and I'm thinking, man, I like what I'm hearing, I'm ready to take some steps and really explore this. How do I even get started on this process?
So, like I said, a lot of times I'm that first call a doctor would make, and again, I call this discovery call. So, on this first call we make, and it can be over the phone, it can be via Zoom, or even live in person if it's Southern California. But we start with that call. On that call, I'm going to understand, what the doctor's plans are, where they want to be, what they're looking to do, in terms of, build out and equipment. We can talk a little bit about, their vision. We can talk a little bit about not only their short-term goals, to start this practice, but where they want to go long-term, right? Do you want to own multiple practices, down the road? That could be another conversation, but that's an important consideration when looking to partner with a lender. But so this is the information that we are, covering on that first call. It's also an opportunity for me to, again, kind of walk through some of the things I've already walked through here, how the process works, how the structure works. I always like to start with a pre-qualification. Here at Provide, we do, online, soft credit inquiries, and really I kind of refer to that as the toll gate, right? So that's the first step. I send a doctor a link. They take about 5 minutes to answer some basic questions, and then we do a soft credit inquiry. But what that does, that gives me a lot of good information, right? It's going to give me not only a credit score, but it's going to tell me their personal debts. It's going to tell me a little bit about their liquidity, how long they've been licensed, what kind of production they're doing, and then, once we clear that, then we have the doctor go back into a loan portal and complete a more formal application. Upload some financial documents, which would include tax returns, production reports if they have them. And then once that's done, typically within about 7 business days or less, I'll have a full-on approval for a startup loan. Okay. Typically, the first people that are involved in part of the startup process is the bank, and is going to be a realtor, somebody that can go out there and help you find a proper space to lease, right? So a lot of times, early on in the startup process, it's the lender working closely with the realtor, on helping that doctor, again, not only with budget, but also find an appropriate space where they can actually build a dental office. And, if you talk to the brokers too, and I think you've had some on your show here, they'll tell you that the lending piece is important. The reason why it's important is when we work through the pre-qual, when we work through that full application, not only are we going to define a budget, right, which is going to be important to that realtor to know, because depending on the budget we approve will depend on what size space that they show you, right? If there's limited budget, then maybe you need to start looking at some smaller space opportunities, right? Because there's a cost per square foot. The other thing that becomes very important to a realtor is what can you afford rent per month, right? If the budget allows for, let's say, $8,000 a month in rent, that broker is not going to want to take you touring, looking at $12,000 a month rent spaces, right? So again, we tend to work very closely with those realtors, at that early stage of the process, defining budget, and finding appropriate space, and at that point, once we kind of get past that, we can start making offers on an actual space to lease. And that's when you start bringing in, maybe an equipment rep to talk to you about technology and what you're going to need, contractors to walk you through what it's going to cost and how they can build out that space that you're looking to lease.
Okay, excellent. Well, and what does this lending process really look like with Provide versus some other lenders out there? Because I know before, when I've applied for loans, there's so much paperwork. I've got to fill stuff out and scan it and send it back and emails back and forth, and it's a lot of work. And so what does your process look like?
So what we're known for is being very streamlined and efficient, right? The whole reason why Provide exists is we were founded about 7 years ago, and we really saw an opportunity to basically bring technology into the dental lending industry to make the process way more efficient, right? So our entire process is 100% online. There's no, the faxes that you're going to need to send in. You don't have to send large, PDF files via email that may get blocked or can't get through. So what we do is we're fully online. We use our technology as a lender to deliver a much better, user experience, not only from initial application, but all the way through funding. So we give doctors access to their personal loan portal. This is where the applications can be filled out. This is where documents can be uploaded, as far as tax returns and production reports and things that we're going to need to underwrite your file. But really what it does, it keeps everything very organized, not only on the doctor side, but on our side, right? At other lenders that I've worked, the challenge was always, receiving emails or faxes, packaging them together, putting them into a file that I can submit to credit. And that kind of stuff took time. Here, because it's all online and it's very organized, if doctors get busy, they have to step away. They can come right back. Everything's right in front of them, so they know what's been sent. They know what's still pending. The application actually walks them through each stage of the process. So really what it does, it helps keep everybody organized so that we can package a deal together, get it in front of an underwriter, and actually deliver you a credit decision, sooner than most other lenders out there.
Okay, excellent. Right. And I think, the speed to getting this done is so important, especially in a competitive market. And, because even though the economy is in a bit of turmoil right now, it's still very competitive out there. And the quicker you can get these things done, the better shot you've got at actually acquiring the practice that you desire.
Yeah. So the way I always explain it to a doctor is just the sooner I can issue you a loan approval, the sooner you can start really putting your plans in place, right?
Yep.
You don't want to sign leases without having a loan in place, right? So if I can deliver you a loan in 7 days, then that can give you confidence that, okay, it's okay to sign a lease. I have financial backing to do what I want to do. So again, the sooner I can deliver a loan approval, the sooner you can start committing to leases, the sooner you can start ordering your equipment, which again, with everything going on in the economy the last few years, turn times on equipment has slowed a bit, so the sooner you can order it, the sooner you can get it in, the sooner you can start making commitments to your contractors. And really the sooner you can start doing all that, the sooner you can open your doors and start seeing your own patients.
Yeah. Yeah, so this is Tim McNeely. I've been talking with Jason Schneller of Provide, and we've been talking about dental practice startup lending simplified. And really, we've been sharing with you what the benefits of ownership are and why a startup can be an excellent path to ownership. We've been giving you some understanding of the lending process and even covering some common misconceptions, all with the goal of helping you feel confident towards taking the next steps towards practice ownership. And Jason, really, I hear a few kind of ongoing themes as you talk about. Number one is just that team aspect, right? There's so many things to do. And I know just listening to this, it's like, I can feel really overwhelmed with everything that has to get done. And if you're an associate or looking to acquire a practice, chances are you're hearing all this stuff thinking, oh my gosh, this is so much to do. But the truth is, a team and having the right players in place, which I know you do, it makes things so much easier. In fact, we talk about teams and the importance of teams in my new book coming out, Dental Wealth Nation. That's one of the keys to success, is having the right people to help you do these things so you can focus on finding the location you want. You can focus on, building the practice you want. And then you have a team watching all those numbers, putting things together so that this actually works for you. And so I hear that team aspect. I hear the simplicity of lending. And I love addressing just those common misconceptions, because so often we put these limiting beliefs on ourselves and we go, I could never do that. But the truth is, it's possible. And so, with that said, if there's an aspiring, owner out there who's listening to this, what would you share with them right now? What would you tell them to help encourage them and help them to continue to find confidence to really start along this path?
Well, I think it's really, listening to, podcasts like this, doing your research, understanding, the unique options that you have out there, talking to resources. And when I say resources, I'm not only talking about lenders, realtors, equipment companies, contractors, or even consultants. I'm talking about mentors that have actually done this before. and can give you some good advice on their experience as well. So reach out, listen to podcasts like this, do your research, and really understand, that this is something that is absolutely possible. If this is something that you want to do, if this is the right path for you to start up a practice, there are tremendous resources out there. All you really need to do is just find them and start a conversation.
Right. And then I'm going to put your email address in for everyone so they can get in touch with you. But what's the best way for people to get in touch with you, Jason?
The best way is email is always great. My email is jason.schneller, my last name, SCHNELLER, @getprovide.com. Or call me on my cell phone, and we can schedule an appointment at 818-561-8106. You can also, we have a great website, with a lot of great content on there, www.getprovide.com. There's great information there. You can even, if you're ready to take that leap and start a pre-qual, you can even pre-qual right from our website as well.
All right. And I'm putting all those resources in the chat right now for anyone who's interested. So any closing thoughts before we sign off here, Jason?
No, that's it. I just want to, thank you again, Tim, for everything you do for the dental industry. Dental Wealth Nation, I've watched your videos and I've learned a lot myself. I've been here doing this 20 years, and listening to some of the people that you have on is tremendous help to me in understanding not only how other aspects of the industry work, but how things have changed, right? Keeping up with the changes and things like that. So I just wanted to personally thank you for not only having me here today, but for everything else you do for the dental industry. We appreciate you.
Well, I appreciate that. And you're so welcome. And one of my favorite things to do is learn from people like you, because, right, I don't know it all. I never will know it all, but I want to work with the best out there who can help dentists achieve their dreams of whether it's ownership or building an empire or whatever it is, so that they can build that amazing life of significance. And so thank you for sharing generously. And I certainly know I'm walking away with, once again, a better understanding of the benefits of ownership. I have a much better understanding of the lending process. And if I was an associate and had a doctor in front of my name, I certainly would feel more confident about taking steps towards practice ownership. And so,
and what I always say, Tim, is it's never too early to start a conversation. So even if this is not something that's in your plan immediately, maybe it's 3 years, maybe it's 5 years, let's have the conversations now. It doesn't cost anything to get on the phone and have a chat and walk you through the process.
That's great advice. So even if you think this is a couple years in your future, it's worth talking about right now, isn't it?
Absolutely.
So excellent. Well, hey, thank you again. And thank you for tuning in to Dental Wealth Nation. And we don't want you to just listen to this, because if you just listen to it and you don't take action, you've wasted your time. But if you take some action, if you take one or two things that you've learned and you put it into practice, you're going to be able to get out there and make it a great day. Until we see you again soon here on Dental Wealth Nation, get out there, and I want you to make it that great day.
You've been listening to Dental Wealth Nation. We hope you've gotten some useful and practical information from the show. Join us next time as we pull back the curtain to reveal the often hidden advice and strategies used by today's most successful individuals and families, and help maximize your net worth so you can take even better care of the people you love. Till next time, make sure to hit the website at dentalwealthnation.com.